Hello, Devero.
Yeah, what's up?
We are live.
Okay.
Good afternoon, everyone. I'm not sure if everyone can hear me. Good afternoon.
I can hear you.
Good afternoon.
Can you guys
Good
hear
afternoon,
me?
everyone.
Can't hear you.
We can hear you.
Let me turn my volume up because I can't hear anyone at all. Good afternoon, everyone.
Can you guys
Yeah.
Can we hear each
sir.
other? Got it. All right, great.
Good afternoon.
Good afternoon. So today's conversation, we are having a conversation about estate planning and insurance and how to incorporate
hear you.
insurance into your estate plan. Can you hear me now? Julian, you said you can't hear? So we're looking to, we had a conversation about how to incorporate estate planning into insurance into your estate plan. We are excited to have some guests today, and we want to make sure that we give them an opportunity to share. But before we start, I wanted to first say, I know we are going through some difficult times, in the last few days. People are expressing, concern, expressing, their
I'm gonna switch over to my phone because I don't have any audio, guys. Can you guys hear me?
Okay. Expressing. We can hear you. Yep. We can hear you. We can hear you.
Can you hear me? I can't hear you.
Yep. Okay. So, Devero, can you hear me?
I can hear you.
Okay, great.
Yeah.
So I wanted to say also is that to say that that we understand that everything that's going on throughout this country, and we wanted to let people know that we understand that people are frustrated, upset, angry regarding a lack of injustice that people feel, especially people of color. And so we wanted to recognize and acknowledge that we are going through some difficult times. So so hopefully this is a wake up call to America, wake up call to a lot of people about how people feel when they feel that they're not being heard. With that being said, I want to jump into this conversation. I want to introduce some powerful people that we were able to get lucky enough to bring on board with us. First, we wanted to bring back April Balknight. She is an estate attorney who has been doing this work for several years. I think in the previous conversation I've shared with you is that April and I met each other years ago when we were teenagers at NAACP Youth Council, and she's always been in the work of helping people who are disenfranchised, helping people receive justice. And so I wanted to let her say some words and then introduce our next guest.
Good afternoon, everyone. Thank you for having me back. I look forward to the conversation.
Thank you. I wanted to also bring a gentleman on who has a history in the service business, whether it's helping people live right, internally, and also live productively as well as financially. And he's a gentleman who offered his services to hopefully explain to us how insurance impacts your estate plan. His name is Mr. Julian Brody. He'll tell you who he is and where he's from.
How you doing? My name's Julian Brody. I'm the life insurance guy. Someone say guru, but I'm here to help everybody understand how life insurance can improve their life and create a legacy for their family. I'm originally from North. I reside in Maplewood now. I lived in South Orange. Went to high school there. So I'm just happy to be here. I thank you for having me.
I appreciate you. Also wanted to bring on a gentleman who is our deputy surrogate in his office, who is a proud graduate of I've always bring this up, Science High School, proud graduate of Newark Public Schools. His roots is here in the city of Newark, and his name is Devero McDougall.
Hello, everyone. Thank you for joining us today to continue our discussion on estate planning. And as the surrogate said, we're going to talk to you about incorporating insurance into that plan. So we're gonna, and I'm glad to have April back, and we're gonna, rehash probably some of the things that we talked about before. But I know sometimes we have new viewers, so it's important to go backwards and not act as if everybody heard our other webcast. So we want to cover everything we covered in the past. And if you have any questions, whether it's about insurance or it's about estate planning, please provide comments, and we'll definitely do our best to answer them. If they're, I just want to say for the surrogate's court, for the surrogate and myself, we're prohibited technically from answering legal questions, but if we can answer, we'll answer in a way that won't get us into trouble. But because we want to make sure you get all the information that this important area in this important area. So again, thank you everybody for tuning in.
Thank you.
So let's start off with the most basic question. What is the surrogate's court? Because I know we're bringing insurance into this conversation. What is the surrogate's court? And then I would like Julian to answer the question about, what is insurance? What is life insurance? So Javier, can you answer the first question?
So surrogate's court is I'll keep it simple and just say we are a court. We're a court of limited jurisdiction, and our primary purpose is to probate wills, and probate will simply means to take a will and make sure it's valid according to the laws of New Jersey, and issue what we call letters of testamentary, basically letters to indicate you are now responsible to handle the decedent's estate. The decedent is the person who passed away. You become the executor or the executrix of the estate. We are also responsible for when somebody passes away without a will. That's called passing away intestate. We're responsible for making sure that the proper person becomes the administrator, as opposed to executor. If it's a will, it's administrator. That person is responsible for handling the estate according to the intestate laws. The law of New Jersey would tell you who's supposed to be the administrator and how those assets should be dispersed. We also handle adoptions. We have the point person for the beginning process of adoption. Adult guardianship comes to us. And we also are holding on to approximately $36 million in minors funds, because minors in the state of New Jersey can't inherit money directly or receive money from lawsuits directly. So if there is not a mechanism, a trust set up to put that money aside, that money comes to us. We hold it until they turn 18 and turn it over to them. So in a nutshell, that's what we do on a regular basis.
Got it. Julian, what is life insurance specifically that's related to this conversation?
So life insurance, in its purest form, it's income protection. So it protects you. It protects your income. So let's say a married couple, the breadwinner of the household, let's say he passes away. Now your income, that income that's missing, is protected now. So if you're missing $100,000 a year in salary, now you have the life insurance in place to replace that salary. So if you have to pay off your house, all the bills you have to pay off, anything you have to do with this money, so it's income protection.
Okay.
And if you allow me, Alter, if you allow me, and so I just want to explain the marriage between life insurance and estate planning. April's going to discuss more detail about the estate planning documents, but I just, when you talk estate planning, you're talking about, making sure when you pass away that your loved ones have been, financially protected. And you just determine who gets your assets, and so a big part of that can be life insurance. Life insurance for many people can be the biggest assets once they pass away. And so that's why we wanted to add that to the conversation. And there's some techniques you can use, but basically life insurance is about risk. Estate planning is about risk. So they work hand in hand. So, when you get life insurance and you want to ensure that there's some liquidity, so money there for your family to have when you're gone, especially if you have a will, just in case. New Jersey is not as difficult to probate a will as in like New York or some other places. But, if there is no will, there might be a time span that you can't get things done. So you might need insurance to make sure your family can survive until everything is taken care of. So insurance is a very important part of that. And that's why we have Mr. Brody on to discuss those basic things, so when and if you can, besides saying that, if you can explain some basic terms so people can, because sometimes insurance terms can be complicated or people just get them confused. So you can explain, basically insurance, insured, insurer, some of those basic terms to people as well.
So life insurance, so you have a couple of life insurance. Basically what people hear a lot is term life insurance and whole life insurance, right? So what I deal with a lot is term in the community that I dwell in, right? Because middle income people, they need term life insurance. It's called pure insurance. It's inexpensive and it lasts you for a certain amount of time. So 35-year term, cheap insurance takes you, what we believe in is invest in the difference. So 35-year term, invest the difference, as opposed to whole life. Whole life is an investment. So it's life insurance attached to an investment, right? I believe that life insurance shouldn't be attached to an investment as well. So we have to split the two. So life insurance, investments, separate, especially in the lower to middle income communities.
Thank you.
April, thank you. What is estate planning? And I know it touches on some adult guardianship matters as well. So maybe you can tackle both of those as well.
Okay, so briefly, estate planning is making sure that whatever assets you have, they are protected and divided the way that you want them to do upon your passing. Many people, because they have different family situations and life circumstances, the way you want to protect your assets may look different. So, for example, if I'm remarried and I have a child that's not with my current spouse, I may want to have heightened protections for my child, just because who else is going to take care of my child? Um, if I have a child that has special needs, I'm going to need to make sure I have accounted for those special needs once I pass away. Who's going to take care of my child when I'm gone? I have to make sure that money's been passed on to someone to take care of my child. Guardianships come into play when you have special needs children who become adults. Once they reach the age of 18, they technically and legally are allowed to make decisions on their own. If for some reason your child is in, incompetent and unable to make those decisions, you need to make sure you have that paperwork in place before they reach 18, because at that point in time, it'll be on them to do the paperwork and make sure that gets handled. And the process takes a lot longer than if you plan ahead. So when you're planning your estate, you just want to make sure that don't fall in the trap of, oh, I don't really have anything. You do have something. If you have small children, you need someone to take care of your children when you're gone. If you have a house, you have something. If you have a car, you have something. If you have a life insurance policy, you have something. So don't fall into the trap that I don't have anything, so I don't need a will. You do.
So can you explain the basic estate planning documents, name them and explain them to people?
Yes. So the basic documents are your living will and testament. You have a health directive or healthcare proxy, and then you also have a durable power of attorney. The will only comes into effect once you pass away. It sets forth what happens with all of your assets once you're gone: money, house, car, stamp collection, coin collection, whatever you have. The health directive gives other people the ability to make health decisions for you if you are incapacitated and unable to make them for yourself. So that's that document. The third document is durable power of attorney. That is something that is in effect while you're alive, and you can make it come into effect at different points. You can give it to whomever you want for whatever point in time, or you can have it come into effect if you're unable to physically or mentally make decisions for yourself. That's something you would discuss with your attorney to make sure that those terms and conditions are clearly set forth.
And the durable power of attorney and the advance haircut directive are no longer effective once the person passes away, correct?
That's correct.
and then the will takes effect. Whatever the will
And then the
says
will
is
takes
what the
effect.
executor has to follow.
Exactly.
So so when we
So
talk about using insurance,
Okay. So it's ways
so when we
that
talk about using insurance,
yeah.
let me ask you a question with that, because when people come to the surrogate court, what we see a lot of time is, as I indicated earlier, the insurance policy may be the only asset the individual left.
Okay.
A lot of times people come in and there's no beneficiary named. So could you explain to people what happens when there's no beneficiary? And it can be from both of you. You can explain from your side, Mr. Brody, and your side for Ms. Buckner.
So when there's no beneficiary names, your assets goes to the state. Now you have to hire a lawyer attorney to retrieve your assets from the state. So you always want to have a beneficiary or leave your benefits to someone because you don't want to go through the trouble of having to retrieve that.
Can I make a clarification? It's possible that it may go to the state, because insurance is a contract, and
Exactly.
so in all likelihood, what happens? It would go to the estate of the
Yeah,
decedent.
that's what the estate. Yep, yeah, correct.
And so if nobody's found and those estates are found, then it's possible that down the road it may go to the state of New Jersey.
You're
So, and so, Ms. Bucknight, if you want to elaborate on that, but also explain what happens with inheritance tax if it goes to the estate as opposed to an individual beneficiary.
Okay. So if your life insurance policy doesn't name it, one of the benefits of a life insurance policy is that it does not have to pass through the probate court. And that's one of the protections. Your beneficiaries just get it. It's not taxed. There's no issue with it. It just is. Once it passes through your estate, then you have all kinds of other potential situations. So now it gets divided. So if you wanted it to go all to your daughter, well, now, and you have, let's say, 3 kids, you wanted one daughter to handle it because she's more responsible. Well, now all 3 kids are going to share in that amount of money. Also, if you haven't specified with the life insurance policy, who you're giving it to and what they're going to do with it, they can do whatever they want with it. So again, you want to make sure these things are clearly stated, written down, and everybody knows what they're supposed to do. If your life insurance policy goes through your estate and it has to go through intestacy, depending upon how your beneficiaries are related to you, then they may have to pay taxes on that. And that's unfortunate because you tried to do the right thing and weren't able to fully effectuate your wishes.
So, April, so if a person passes, they don't have a will, but they actually have they're gifted life insurance by their someone, their loved one. Does that person have, is that totaled in the entire estate once that person's estate is probated, or is it discounted? Is it separated? Like, what happens with that cash settlement that Mr. Brody pays out to let's say Tom, wife passed, and so, well, let's say somebody differently, right? And so, is that money then accounted in terms of how you would dividing up that estate when that estate is probated when it comes to our court?
If there's a named beneficiary, it does not come through the estate. So it's treated totally separate and it doesn't factor into it. So if you have a life insurance policy and there's a will, you're supposed to get, let's say, $10,000 in the will, and the life insurance policy is also $10,000. You're going to get $20,000. You'll get the $10,000 from a life insurance policy, and you'll get the $10,000 through the will. You'll get both.
Okay.
And let me just add, just like with life insurance, if you have a transfer on death, paid on death at a bank or any other financial institution, that is also what's called non-probate. Non-probate meaning it does not come through us, whether it's administration or it's probating a will. That's non-probate. It doesn't come through the surrogate's court at all. So that's what she means by that. So so that also means if you have a pension at your job, whether IRA, if you name somebody as beneficiary, that should go directly to you. We often have people coming to us saying that, oh, well, the bank said I need to get a certificate from you, a short certificate from you guys. And we ask them, well, will you name the beneficiary? Yes. Well, the law says the money goes to you. There's no need for you to come to surrogate's court. And when you have those situations.
So I want to add, life insurance is a huge problem in the city. People don't have it. I don't care what you have, whole life, term, universal, variable. You need something in place. Period. Just something. So people got to start looking into what insurances they need. Sit down with somebody, discuss it with them, and have something in place. Because it's a lot of GoFundMe pages I'm seeing on Facebook, and that's not the way to go.
And let me add to that. I just recall when I was a kid, my mother didn't understand estate planning or anything like that. The definition of it, she didn't look at it the way we're talking about it now, but she did understand it because she would say one or two things. I need enough insurance for you to bury me, or I need enough insurance to make sure when we were younger, so you have some money, so there's so you can be taken care of. Now, as Ms. Bucknight said earlier, you have to be mindful of how you designate your beneficiary, because if you name your beneficiary a friend and you think that friend is going to use that money to bury you, as she said, as Ms. Bucknight said, that money belongs to the beneficiary. They do not have to use it to bury you. So be mindful of that. Now, there's mechanisms you can divide up the beneficiaries, a third. If you have, two people you want to leave money to, and you want to leave money to the estate would then use that money to bury you. So there's mechanisms like that that you can use the beneficiary designations to ensure that you get buried. But if you leave it to one individual, you're going to hope out of the kindness of their heart that they're going to bury you, but they don't have to, because that is their money. So I have to emphasize what Ms. Buckner said earlier, because a lot of people are under that assumption that they have to be buried with that money if they leave it to a particular beneficiary, and it's not true.
Let me jump in. I think there's a question that came in that's at the bottom, but I also wanted to emphasize why we're doing this. I think Julie, you made a perfect point, and April made a perfect point a while ago when we started having these conversations about why we're doing this. Is because there is a large number of people in this country who do not have insurance and do not have a will. And I know the first part of our conversations when we started doing this outreach, we were talking about it from the will aspect of it. And so we also noticed that, people don't have life insurance at the same time, and whatever terms that they feel fit them, that's between them and their family. But we wanted to make sure that something is in place, to protect them, protect their families, protect, their children, great grands, or whatever, who they feel they want to provide a gift to upon their passing. But we want to make sure that information is at least discussed amongst us, so we can hopefully after the end of this conversation, someone will either reach out to you, April, or reach out to Julian about how they can get their affairs in order, because we don't control the timeline. But how we control the timeline, we do have some say in that. There was a question that came in by Mr. Murphy. He asked a question: what happens to a person passes and the beneficiary deceased? Who gets the insurance?
If the beneficiary deceased, it goes to the estate, not unless, like he said earlier, not unless they have a third, then it goes down the line.
And also to that's why you also have to be mindful to name a secondary beneficiary, maybe even a third beneficiary, any contingent beneficiaries, to avoid that possibly happening. But we do know that does happen, because we see it coming here all the time. And as Mr. Brody said, 9 times out of 10, it's going to go to the estate, which might cause some problems with inheritance tax, depending on how big it is. So you want to be mindful of that. And I want to say this too. Remember, everybody has life circumstances. So if let's say I named my wife my beneficiary, but we end up getting divorced. If I don't change that beneficiary designation, this woman who I divorced is going to continue to get that she's going to get paid out when I die, and I never wanted that. Especially if, let's say, we got divorced for a reason, I don't want her to have my money. So when you have life changes, you got to make sure you change your policies, whether it's divorce, you have new children coming in your life, or you just want to help somebody else that you think needs help. You have to make those changes when life changes as well, especially with kids. You got to add on the kids.
Also, let me touch
Can
on
we
what you just
can
said.
we just
Oh, I'm sorry. Let me go back. I think April wants to jump in, and Julie, you can come into that.
I just want you, Mr. Brody, to clarify whose estate the money goes to. Is it the estate of the actual named beneficiary or the estate of the person who passed away?
It's the estate of the person who passes away.
Per Mr. Murphy's question.
Yes.
Got it.
Talking
So
about two estates. So I just wanted it to be clear for everybody
Okay.
listening which estate you were referring to.
I just forgot my point. I also wanted to touch on your point. When you're married and you get a divorce, if you don't have a life insurance policy in place, the judge will order you to have a life insurance policy for that divorce. So that's another thing.
He may. That's family law stuff. So he may. I don't want to go too deep into that.
All right.
If you have children, he definitely will. If you have children, the judge will force you to get a life insurance policy.
Will. So you might want to put that in place before that happens, because if he see you have something in place, he might be lenient on you. So,
well, since we're going there, the judge, if he tells you to go ahead and get an insurance policy, so you can have it for not only for the kids but also for the wife to cover any settlements, a bad word, but any money that's supposed to went to the ex-spouse. If you don't pay it, best believe that there will be motions to make sure that you pay it, because I've seen that happen a lot of times where people fail to do it. And when you pass away, guess what? They're going to still come after that money when you pass away if you don't do it properly. If you got money in the other state, and that's Ms. Barton and I talked about earlier, if you got remarried and you didn't do that policy, they're coming after your estate. So what you thought you were leaving to your new spouse, it's going to go to your ex-spouse because you didn't properly pay your premiums and do what you were supposed to according to that divorce decree. So, sometimes people think that they can outfox the courts, but there's mechanism eventually for them to get what they were entitled to. I think to avoid, and this is part of estate planning, to avoid that new spouse to have all this stress, you should just go ahead and do what you need to do under the divorce decree, because yes, that relationship is over. I get it, but let's avoid, and the whole, like I said, estate planning, to avoid also family members to have additional stress that they don't need to, because they're already dealing with your loss, and that's a heavy burden that they're enduring. So, a lot of times it's just better to just be straightforward, follow what you're supposed to do, and that's part of the estate plan instead of, because listen, as Altry said, I'm from Newark, so I know how sometimes people want to get slick and get. In the long run, it doesn't benefit the family when you do that. So do what you need to do to protect them.
Can I say one more thing?
Sure.
Mm-hmm. I hear a lot of people when I talk life insurance that say, I don't really need life insurance. I'm going to do the real estate thing. So what they have to understand is life insurance is the foundation to building wealth. It's the foundation. So you lock the life insurance in place. Now you can build, right? So life insurance, debt elimination, retirement planning, and then your other goals and dreams as like real estate and everything. Because if you start with real estate first and something goes wrong, you pass away, you move on, and now what happens? There's no money in place to pay off that property. So you want to start with life insurance.
So Julian, let me jump in for a second. When you say the real estate thing, are you talking about investing in real estate as a way to build wealth? Is that what you're referring to?
Exactly. So you hear a lot of people that's bypassing life insurance and jumping into the real estate investing.
And let me add, even if you do decide to invest in real estate, insurance, not just life insurance, just insurance is for risk. So there's a risk that house may get destroyed. So you still need insurance. Life insurance can also be a mechanism also to pay off the debt that you have on it. So you can't ignore life insurance or property insurance, even if you said, let me do the insurance thing. So insurance is about risk. And so you want to protect, you spent all that money for that real estate, you want to protect that property. It's about risk and protection. So, so don't, as he's saying, don't ignore life insurance, property insurance when it comes to even investing in real estate.
Exactly.
Let me bring this back to estate planning. So April, how does this all relate and connect to estate planning, and why is this information is important?
It's critical because, life insurance is one way of protecting your assets, right? Another way is making sure that once you have passed away, that we know what we're going to do with everything. Where is this going? When I have, if I try to do the real estate mechanism, Mr. Brody's right. I may not have any true equity in any of those properties, and then what? Um, so it's important that when you're planning for things, that you're thinking of all these scenarios, and when you sit down and talk with an attorney about, your planning, hey, these are all my life circumstances, these are all the complexities I have in my life. Now, how do I protect my wife, my children, my family in these situations? It looks like there's a question about whether we should put in writing
There was a
our wills
question
that
that came
stipulates
in.
that a certain amount be allocated.
Yeah.
Yeah. So if you specify an amount in your will for which to be used for you to be buried, you run the risk of it not being enough. If it's not enough, then someone will have to make up that difference. Usually what I just recommend is that the burial expenses will be handled first, and then the remainder of the state will go to however you've decided to designate it.
And speaking about cost, if you have a life insurance policy, and that life insurance policy can be utilized to bury you if you decide to use it by naming the estate, whether 100% of it or a portion of it, that can be used. And somebody asked me a question when we used to be able to go out and speak to people. Asked me a question about they said their brother wanted to be buried in some type of mausoleum, and the executive didn't have enough money. What happens? Well, they don't get buried in the mausoleum because there's not enough money. So insurance is one of the mechanisms to kind of ensure that the burial that you want, you get. And speaking of burials, you can put how you want to be buried in the will. Who you want to be your funeral representative, how do you want to be buried, but you have to make sure that whatever your wishes are can be covered. And if you don't have, let's say real estate, your only asset is a house, and you're underwater, meaning that the outstanding debt is greater than the actual value of the house, then when the house is sold, as there's no equity in it, then you can't use the house to bury you. So insurance may be that way to do that as well. But that's, like I said, you want to make sure that you have the proper assets to get the proper burial.
Let me ask a question. So, and this is to April and to Julian. We in our experiences, we witnessed, a lot of funeral directors who come into our office, and sometimes they have control over the insurance, or they're requested to provide, direction over the insurance policy so they can price out the burial or get recommendations. What are your thoughts on that process? Is it recommended? Like, what are your thoughts on that situation?
Well, let me add to it. It's actually, they want you to sign the insurance policy over to them. Is actually what they're doing. It's because it's bearer paper. So you're signing it over to them is what they're asking you to do.
What are your thoughts on it?
My thoughts, I feel like as you should handle it yourself. I feel like you should never turn over your insurance policy, but they're playing on people's emotions at that point, right? So your loved one just died, you're emotional, so we can handle everything. Just sign it over to us. We'll make sure everything's done. I feel like you should take matters into your own hands and do everything yourself.
I echo his sentiments completely. I agree that, and I say this every time we talk, you're in a completely compromised and handicapped emotional state when you're dealing with, the passing of a loved one. It is so important to try to do your best to handle everything, to be aware of what's going on when you're passing away and you're leaving stuff, like leave a will. Think about who has the emotional capability to handle stuff in a crisis. That's the person you need to name. That's the person you want to make sure knows where all your documents are, knows where your burial plot is, knows which funeral home you want. Like that's the person you need to have, and that's the person you need to name in your will and give them all the directions step by step. The importance of the will is so that they don't have to think about all the things that Mr. Brody's talking about, because it's already done. Right, you've already made those decisions. You already set everything in place. That's your last gift to your loved ones. Keep it. Don't just leave it to the funeral director to do anything. They don't care as much about your loved ones as you do, and they have a lot of other things going on. Unfortunately, you're a person or another. So handle it yourself if you want it done right.
Exactly. Can I touch on one other thing? One last point.
Sure.
So I get a lot of questions when people ask, how do I know how much coverage do I need? Right? Because nobody knows. You don't know. People don't know how much coverage they need. So it's a formula for that we call a DIME, right? So it stands for debt, income, mortgage, and education, right? So how much debt are you carrying? Right? How much money do you make? Yearly salary. Mortgage. How much is on your mortgage? How many kids do you have? Are they going to college? So you factor all these things in, and that's how you come up with how much premium, well, how much life insurance you need, right? So you guys get the concept?
Sure.
We got it.
Got it.
We got it. And I'm gonna have to be an attorney. So I want to make clear to people when you talk about mortgage, you give a mortgage. You giving a mortgage to receive a debt. So the actual money that you receive from the lender is your debt, and your house is collateral. That's the mortgage. You're giving mortgage. So technically, I like your acronym, but technically, when you do debt, you're already factoring in the debt. So you're not factoring. So if you put it, and this is accounting in me too. If you do both, you're double dipping. So a mortgage is collateral. The actual money you get is part of the debt. And so my law professor would be proud of me for saying that, because we always point that out. So I just say that.
You've been waiting
for those who not lawyers. For those not lawyers, DIME sounds like a great concept. And also, thank you for the explanation, because through these conversations I learned a lot about how to look at what a mortgage is and look at it accurately in order for it to make sense for me. And so how I'm supposed to pass that information, and also how much insurance I'm supposed to have, just in case, because I know in my mind, both my children are going to Howard Law School, Howard, medical school, Howard University, life insurance. I factor that number in. So, if anything happens to me, that they're walking in and out of school with no debt. And so, I look at it that way. And so that's, and I appreciate, the clarification on everybody's part. There's a term that was used, irrevocable trust. What is that? Does that relate to life insurance? Does that relate to, what we do in terms of estate planning? Maybe, April, you can answer that question.
So, an irrevocable trust is one that cannot be changed. So you, for whatever reason, you may want to set aside a certain amount of money, naming a certain person to handle it, or for a certain benefit. There's usually a lot of what we call contingencies on there, or conditions that need to be met. If you think that a trust may be something you're interested in, it's usually, to me, very specialized, and it fits personal situations. There's not one size fits all. So you would definitely want to consult with someone about that before you decide what you're going to do, how you're going to do it. You can do it in your will. You can do it before you pass away. So there's a lot of things you can do with a trust. So I would highly recommend you get some more information about what would fit your individual needs.
Okay.
I just noticed Mr. Kettle. I'm sorry.
Miss Kettle.
Miss sorry.
Kettle.
Kettle's asked about pre-arrangement agreements. The question basically was, I guess it makes better sense to entertain a pre-arrangement agreement when we're talking about burial. So if you guys can speak on that, because she also then followed up by saying, because that way with the funeral home, you can lock in the price, so if you can express your feelings on that.
A lot of clients do take a moment to go ahead and get their funeral expenses handled, right? So you go to the funeral parlor, you select who you want, you have your estimate, your burial plot, your prices covered, and it does save you money in the long run, and it saves you a whole huge headache. I mean, I think to me, while the money's important to save, I think the headache that you save is really, to me, the bigger value.
Right, and also I know from my family experience, a lot of times family members want to be buried next to another family member. So by doing pre-arrangements, you can ensure that as well. It can be just simply sentimental reasons as well. You want to do pre-burial arrangements to make sure you're buried by a loved one. I know we had a situation here in the Surrogates Court where we unfortunately sometimes deal with. We work with the morgue keeper and the ME's office when the body's not in claim, and we appointed one of the law schools to handle the estate. And luckily, they went in and checked that person's condo and found they paid for pre-burial, and they were able to allow them to be buried next to their mother and father. Otherwise, they would have never known, and they might have been, and if situations would have went differently, they might have been buried in indigent burial, which is in essence what we hear and call like almost like a potter's field. So that's one of the other reasons why you want to do it, because people come check your paperwork, they also know where you want to be buried, whether you do or don't have a will.
So Kalina wanted me to make a recommendation. She said, "Can we change the dime to dice?" Change the M to C for collateral. So
that's a good one. I like that though. I like that. Nice.
We have a very smart audience, so a very interactive audience. So, and the other part of it is that and maybe you guys can provide some more clarification in terms of estate planning and why insurance is important. Like how much money are families losing if they don't family plan, if they don't do, estate planning in terms of either a will or maybe doing insurance? Like, is there any real number that you could think of, and maybe from your research, that says this is what the average American lose when they don't estate plan, when they don't do a will, when they don't have a life insurance? Is that something that's a real number? And then what does it look like? And what does that do to the next generation for that family?
That's a very good question. I will say this in terms of taxes, because taxes have changed. Federal taxes and New Jersey federal estate tax and New Jersey estate taxes have changed. If you're not, so for instance, in federal law, if you don't have 11.58 as an individual in assets, then there's no estate tax going to be charged. A married couple is like 23.16. because there's an exclusion to avoid taxes. Now, if you're in that high net worth, then you'll start losing money for taxes. But those in lower brackets, it's not an issue. And in New Jersey, also, there's no estate taxes. So it's not as much an impact today, but the law can always change. That's the thing. Those thresholds can come down. But I will say inheritance taxes is a thing that happens in New Jersey. So if you don't do it right, and if you could have name somebody a beneficiary insurance policy to avoid inheritance taxes, and if they're not, what we call a Class A beneficiary, a spouse or child, and let's say they're a Class C beneficiary, where it's a relative that's not listed in Class A beneficiaries, then they're going to have to pay estate taxes, inheritance taxes, when they didn't have to, if you would have just did an insurance policy to give that family member or a friend, because a friend is definitely going to pay inheritance taxes. So there is financial implications when it comes to that component of it. But there's loss in the sense that so let's go middle income, lower income. For those individuals, they may not have a lot of assets to leave anything. They might not have a house. So if I can get a policy where I'm paying, I don't know, $20, $30 a month, and I can leave my kids, and I don't know how much that. So I'm just throwing out numbers because I'm not the insurance guy. It's 25. Let's say I get a 25,000 to 50,000 policy. At least by paying those premiums every month, I know I left my children something other than not having it at all. And if you were struggling in the first place, there's children are definitely going to be struggling without you there to provide. So that's what's going to be lost financially if you don't have insurance as well.
So let me touch on one thing. I don't know if it's a number out there for that, but I can tell you that our community is definitely missing out on building wealth through life insurance, right? Life insurance, like I said, is the foundation of building wealth. So like he touched on, for very low cost a month, you can build wealth or leave a legacy for your family. So $100,000, $200,000, even $50,000 for very low cost monthly. So I think we need to start definitely looking into life insurance to building wealth in the inner city community. Definitely.
April, you wanted to ask something?
I just want to say that there's a place for, like, everything won't be covered in the life insurance policy, even if you have one. And that there may be some benefit into having multiple life insurance policies to cover a variety of situations, right? So maybe I'm giving one policy to handle my burial expenses. I'm giving another policy to handle my special needs child. I have a third policy that, maybe goes to, a spouse, a fourth policy that maybe goes into my estate. If I have anything like a house or something, whether I have a life insurance policy or not, that's not really going to change that I need to somehow dispose of my house. So I just wanted to be clear that you need both, right? You need to have the life insurance and you need to have a will. One is not going to negate the other.
Do you mind? I want to kind of take a step back and ask Ms. Balknight. We talked about the important documents for estate planning, and you were spot on when you talked about making sure the executor is the proper person. So I just want to ask this question. So for your durable power of attorney, advanced haircare directive, or health directive, and your will, do you have to name, and also naming the funeral representative? Does it have to be the same person?
No, it does not have to be the same person. You can certainly pick and choose who you think would be, the best suited. So, for example, let's say I have a sister or a cousin who's a doctor. Maybe I want that person to do my healthcare proxy. They're going to have a better sense and understanding of what these medical terms are and be better situated to make a decision on my behalf. Then maybe I have an accountant friend or something, or an attorney friend who does estate planning. I may want to name them as my executrix or executor of my estate. It doesn't have to be a relative. I think that's the other thing. People they choose between people that they're close to. It doesn't, you probably should know who's doing the executing your will, but it doesn't have to be like your child or your mom or your sister. It could be a non-relative, someone who you know is going to be responsible and able to handle your estates in a timely and effective manner and without depleting the assets of your estate.
So what I heard in your response also is
Let me jump in real quick.
Debunking the myth. Let me just finish debunking the myth that a lot of people believe that the oldest child legally is responsible for everything. So you debunk that myth, correct?
That is correct. Your oldest child does not have to be it, may not be the most responsible person to be it, and is in no way obligated to do it.
Let me jump in real quick. So I just wanted to ensure, so if you're watching and you have questions, in order for this to be a definitely a healthy discussion, please ask questions, and post them in the inbox so we can make sure those questions are asked. And also, if you want greater clarification on things that that we need to go in greater depth on, please ask those questions as well. I'm sorry, Devere, you were going to say something. I'm sorry.
I just want to ask Mr. Brody, explain the difference between an insured, an insurer, and insurer.
An insured. Right. So insured is the person that's insured. Like you have the policy, you're insured. The insurer is the person that pays for the policy. He's the payer. He pays the policy. And what was your third one?
That and you can and we always talk beneficiary, but define beneficiary again.
The beneficiary is the person that you put down to receive the payout for the policy.
And is it possible for the same person to be all three, or a combination of the three?
Well, I personally never saw that, because if you have the person at the main beneficiary, he's already there. He's already getting the policy. So all three, like the beneficiary.
But you're in essence answering the question.
Yeah.
There are times where, of course, the beneficiary, if the owner of the policy is the beneficiary and they die, obviously it's going to go to the estate, so you don't want it.
Yeah.
So, but you can't be the insured and the insured. You can be the owner of the policy and the one who's being insured and name a beneficiary. So that's what I was getting at with the question. So you basically answer that and saying, if you're going to name your estate, name your estate. Because if you're going to name yourself, it's going to go to the estate. And as we talked about earlier, there could be some tax implications behind that. So be mindful of that if you do that. So it's not forbidden, but it may not be the most prudent thing.
Exactly.
Also, Devera, you kind of, not directly, but indirectly bring up a good point, right? Which is I can get a life insurance policy for someone else, right? So if I have, maybe I have older parents and I'm like, I don't want to be saddled with this burden all at once. If I have children, if I have a sibling that say has special needs, maybe I might want to go ahead and get a life insurance policy out on someone else.
I encourage that as well a lot. It's a lot of people out here with older parents and they don't have life insurance. It's a lot of people out here with cousins and aunts and grandmas that don't have life insurance. So I encourage people to get a life insurance policy on their loved ones.
And I'm a little rusty, but what does insurable interest have to, if you don't have insurable interest? Could you explain insurable interest if that's still a requirement in order to get a policy?
It is a requirement. So you have to be some kind of family member or a friend, but it's a thing, but it's ways around it. So you have to either be a family member, you can be a friend, but you have to show insurable interest. Guys have to both be together at the signing of the policy, and you have to have a reason to why this person is being insured.
Okay, so I'm a kind of spin it a little bit because I know a lot of people that are probably watching have small businesses, and when you talk small businesses, or they might have partnerships. Part of insurance and part of estate planning, business planning is part of estate plan. Could be part of estate planning. Can they have a key man policy, a policy against their partners, so to make sure that business continue on, or there's money in the business, so that if they have children, that can be used to buy them out, buy out the interest, so it can go to the family members. Is that possible?
Definitely, insurance is definitely used for that. So if you own a business and you have a partnership, you can take out a policy for that partnership in the business. So just in case if something was to happen to you, you pass on, you move on, your partner can cash out that policy and pay your family members. So that's definitely a big part of life insurance as well.
Thank you.
Yep.
Melissa, there's a question that came in. No, Melissa said she said at the end of it you just answered, but I'm gonna go back, maybe offer clarification for people who may not have heard the answer. If you have a parent with dementia and is remarried and you're not sure that the spouse will do the right thing in regards to funeral expenses, can I get life insurance?
Can she get life insurance on the person with dementia or for herself?
Person with dementia, right? The mother. In this case, the mother.
She can definitely try to get a policy. I encourage her to try to get a policy. She could definitely do that. Yeah, I encourage it too. I'm not sure
you said,
if she will.
Okay.
So let me just add this piece to what I kind of gleaned from the conversation, from the question as well. So the insurance piece, I agree with you. Nothing stops you from going ahead to get the insurance policy, but the burial piece of it, it all depends on the state law in terms of who's entitled to bury them. The law, if there's not because if they have dementia, they didn't do a will, then they don't have the capacity to go ahead and appoint somebody to be the funeral representative. But in New Jersey, and if April would like to touch on it, but in New Jersey, there is a law to determine who's entitled to bury a loved one.
Well, I mean, the short answer is the spouse would be the first person, and then after that would be, who's the most closely related if there's not a will in this, and you're not sure that the other parent is going to do the spouse is going to do the right thing, that's a really, really, really tough
Touchy.
position to sit in, and you might want to think about how you're going to handle some things moving forward.
And I will
This may be a
add this.
weird question.
Let me add this. I will tell you this. The funeral homes know this law, so you can have that conversation with them. The most important piece to them is that the funeral is paid. So if you are one of the named individuals who can have control over the remains and disposition of the remains under the statute, if you pay them, they will make sure they comply and allow you to do it as long as you are one of the people listed in the statute. Because as I think Ms. Balknight mentioned earlier, and Mr. Brody, when they talked about turning over the policy to the insurance company, to the funeral home, they want to get paid. It's a business. And it's not a knock on them. If you pay it and you are one of the people that are allowed to bury them under the state statute, if there's no will named the funeral representative, you're fine, and you should seek an insurance policy if and this goes to your question earlier, Surrogate, because if you don't get the insurance policy, might be money out of your pocket that you may not necessarily have anticipated to pay for a family member's funeral. So that's a financial hit right there as well.
I have a question. So this may be a weird question regarding, people with dementia or people who have Alzheimer's, severe Alzheimer's. Can you get insurance? I know Julian, you kind of was hesitant in terms of how to answer that.
I didn't want to discourage anybody from trying anyway, but I'm not an insurance underwriter, but I encourage people to get get a policy and let it go through underwriting, so underwriting can tell you, so your agent can tell you it didn't go through. But always try to get the policy though. So I didn't want to discourage her. So definitely go for it. Try to get the policy, and hopefully it works out for you.
Because it's about risk.
It's about risk. They're assuming risk. And another thing I want to touch on, if it's any younger people that's listening to this call, younger guys get older. I see it all the time in my office. They get older, they get mature, they have kids. Now they're 40. They got in trouble when they were younger. Life insurance companies, look into that. They will deny you for that. So you got to be mindful, the younger guys that's listening to the call, of what you do when you're young, because when you're older, it affects you with life insurance in every aspect of your life. I've seen a lot of guys walk out the office defeated because of things that they did when they were young, and now they got 5 kids that they're grown now, they want to get insured, and due to their criminal history, they got denied. So
okay. Yeah, because when you said when they were younger, there's so many other things that young people do.
Yeah,
but I appreciate the clarification.
You gotta read between the lines.
I did, but if you have an audience,
I got it, Mr. Brody. I got it.
Got it.
Oh, I got it loud and clear.
That's a big situation right now in the community as well. Felonies and like life insurance companies look at all these things because they're assuming the risks. And if you're too risky, they're not moving forward.
They look at your criminal history. That's interesting.
Any drug charges, gun charges, they look at these things.
No different than like car insurance. They look at your driving record, your risk. I mean, it's a risk. They have to. I mean, in order to determine, if they're going to give you a policy, how much should they charge in premium? Your premiums, in all likelihood, if they give you a policy, is going to be much higher than somebody who doesn't have that criminal background.
So let me say one more thing in closing. I encourage parents to get their kids life insurance young. So when they turn 18, get them a policy because they're young, it's cheap. Maybe they haven't gotten in trouble. So always lock in the policy as young as you can and as early as possible.
Got it.
And if you have any,
I know we are. Go ahead. No, go ahead. Finish your thought.
If you guys have any like younger cousins, young nieces, nephews, and they're like 20, lock them in the policy. Lock them in the policy early.
I know we're bumping up until the 1 o'clock hour, and I just wanted to, just try to wrap this conversation up. One, I want to thank you for, and I also want you guys to get some closing remarks as well. But I wanted to, personally thank you, for donating your time, to this conversation, because a lot of people who are listening are taking action based on the information that you're providing people, but also want people to get in contact with you. They want to have, one-on-one conversation with you, about their own personal needs, or maybe have a conversation that they can introduce you to their family or to friends or to maybe smaller circles where, at some point you can have that conversation with them, and hopefully they can, use your services. We encourage people to use services based on the information that they provided. So part of the reason why we're doing it is because, again, we see a lot of folks who come into our office who are uninsured, who are unwell, but they have family. They love their family members. They love their children. They love their spouses. But some reason, we procrastinate, when we decide to take the opportunity to write down the things that we need to do. And that procrastination leads to a lot of times us not, planning ahead for our loved ones. So I want to let April, get some closing words, Julian as well, and then, we'll wrap it up as well.
So, ladies and gentlemen, if you've heard nothing from either one of us or any one of the seminars, it's plan, plan, plan. Take matters into your own hands. Don't let someone else make those decisions for you, because they may not do it the way that you would have liked or would have wanted, or in a way that really protects the things that matter to you most. So please, please, please handle it yourself. Take ownership. Take back the control. It's something that you can do. It's the last gift you give to your loved ones, handling everything so that they don't have to think through it. They can just implement step by step, and they can really grieve and mourn the loss of you. It's a super helpful gift. The Surrogate has my contact information. I was trying to figure out how to drop it in the chat, but it only let me send a private message. But the phone number is 908. Okay.
908. I'm writing it down while you're talking.
Well, I'll send it to you privately while Mr. Brody's talking, and then you can drop that in the chat. For some reason, won't let me do it publicly.
You can do it. I'm at 908. Just keep going.
I'm at 908 485 8505. 8505.
Okay. Great. And so that's how people can reach out to you. You're from what law firm again?
April C. Buckner, ESQ.
And is this minority owned? I'm curious.
Yeah, by yours truly.
Got it. Okay.
The one and only.
Cool. Appreciate it. We want to make sure that we let people know exactly how to reach out to you and get in contact with you, so you can have those conversations and hopefully use your services going forward.
Thank
Julian?
you.
Yes.
No, thank you.
In closing, I just want to say, everybody that's listening to this call, we all need life insurance. Your friends, your family members, everybody that you're close with, your loved ones, they need life insurance. So start having a conversation at dinner with your family, see who has life insurance, see who doesn't have life insurance, because we need to start building a foundation of wealth in our community. And I just want to say thank you guys for having me. And this is very beneficial for the community. And I'm going to give my number. If anybody wants to reach me, my number is 973-868-9773. We also do financial 868-9773. Along with insurance, we also do financial planning at my office as well. So if anybody's looking for a financial advisor, if anybody's looking for investments, retirement plans, everything you need, debt elimination, everything from the top to the bottom, the full financial house. So thank you guys for having me.
Great. And Devere, you have anything you want to share?
The only thing that I want to leave everybody with is, the more complicated your situation is, it's very important that you reach out and get professional help. For those of you that don't believe that you can afford an estate planner, an attorney, and whether an attorney or whether somebody who has the estate planning license, you can reach out to the Essex Bar Association, ask them about any legal services that may be free or discounted. Like we have Essex Newer Legal Services may do some of this work. So if you need a lawyer, you think you can't afford a lawyer, there are some services out there. So contact the Essex County Bar Association. If you are in Essex, if you're in another county, contact that bar association, let them know what kind of referral you're looking for. But the more complicated it is, the more you need an attorney, especially if, like Ms. Buck and I talked about earlier, if you do special needs, you want to add insurance to a special needs trust, or you want to do an insurance trust, don't do that on your own. Get an attorney that specializes in estate planning. That's very important. In the long run, it's going to be the money that you spend in the long run is going to be more beneficial for you. But if you try it on your own, I still recommend you have an attorney review it for you. And I will admit I'm biased, but I think it's the most prudent thing to do. The more complicated your situation is, you need professional assistance. And just thank everybody for tuning in.
Thank you.
Thank you for everybody tuning in again. Again, don't let this conversation just be a conversation. Take action. And use it and share the information as well. Protect yourself, protect your family, and plan forward. And let's make sure that we put our families in a better situation than we inherited ourselves. Thank you very much.
Appreciate it.
you.
Thank you.
Take care, everyone.
Thank you.